Priscilla Barrera with the Investing News Network. And here with me today is Chris Berry of House Mountain Partners. Chris, thank you so much for joining me today. And I wanted to start by asking you, we've seen overall battery costs rise for the first time in a decade on the back of raw material price increases this year. Do you see that as a trend that could hinder electric vehicle adoption going forward? And maybe what type of moves or decisions do you see automakers making moving forward to face that cost increase?
Well, I do perhaps see maybe stagnant battery prices or rising battery prices hindering EV adoption to a certain degree, maybe not materially. I mean, just in 2022, we've seen pretty much any electric vehicle manufacturer that you can think of, Rivian, Tesla, BYD, Ford, General Motors, they've all announced price increases for their electric vehicles, which obviously is not conducive to increasing sales. Look, we're in a situation now where I think the automotive manufacturers have more than just lithium to worry about. They have to think about their supply strategy, their sourcing strategy for some of the other metals as well. And so that is actually going to be, I think, a key factor, not just in 2023, but going forward, as well as how these automotive manufacturers think about sourcing strategies and try and mitigate some of the pricing volatility, because I would argue that the pricing volatility we have seen, again, not just in lithium, but in a lot of the metals, is here to stay. And it's here to stay, again, because you have this policy shock forcing electrification and decarbonization. You have consumers who are also very interested in electric vehicles in particular. But we have a situation where, at least here in the United States, I believe the average cost of an electric vehicle is $66,000 right now. And that is just not a realistic price point for widespread electric vehicle adoption. And so how the OEMs, how the battery manufacturers mitigate, perhaps they hedge against pricing volatility, is going to be a key theme, I think, going forward.
Of course, I wanted to ask about lithium prices. We saw lithium prices in particular remain at high levels this year. What is your expectation as we enter 2023? Do you forecast prices to still remain at these levels? And I guess my question is there anything that could derail the story for lithium next year?
Well, what would derail it would be, electric vehicle sales falling off of a cliff, for lack of a better phrase. The policy supports that we have seen in the form of subsidies being withdrawn, and some sort of a major kind of global COVID resurgence. I mean, something that really would just absolutely crush demand. Now, the good news is the likelihood of any combination of any of those factors I just laid out, I would say is quite slim. That said, to your original question about where lithium pricing goes, I mean, I don't think any of us in the sector would have gone back, say, to October or November, December of 2020 and said, over the next 2 years, lithium pricing is going to increase by 900%, which is precisely what has happened. I would argue that going forward, I think you could see stagnant lithium pricing, maybe some slight downside. I really think lithium pricing is going to be range bound going forward. But again, there's good news and bad news to these stories. If you are an investor, and let's just say that the lithium spot price wobbles, if you will, during 2023, 2024, between anywhere from, say, 60, 70, 80,000 US dollars a ton on the spot market. As an investor, when you look at the lithium cost curve, and even the lowest quality assets, right, the Chinese brines and Chinese hard rock, they're economic at, say, 25,000 US dollars. So as an investor, how do you approach lithium? How do you invest when literally every single developed and undeveloped lithium asset on the planet is profoundly, right, resoundingly economic? And so I think actually lithium going forward, it's less a price game. In other words, you're not investing in these companies betting on higher prices to pull lithium valuations up. I think lithium is a volume game right now. And so those companies, whether or not they're existing players like Albemarle or Livent or SQM, I mean, names we're all familiar with, they are going to increase capacity, and they've done a pretty good job of it, I would argue, in recent years. I think that 2023 and 2024 in particular really hinge, from a volume perspective, they really hinge on the success of companies like Lithium Americas with their brine project in Argentina, Sigma Lithium with their hard rock project in Brazil, Core Lithium with their hard rock project in Australia, and then a few other companies that may add smaller tonnage to the market. But the success or lack thereof of these companies in terms of bringing supply on stream will really determine lithium pricing going forward. One final note on lithium pricing. We all look at the data, right? We look at imports and exports and EV sales and all that kind of stuff. The most important metric to me in lithium is the price of spodumene. Okay. 6% spodumene in particular. Now, fortunately, there is a fair amount of visibility in that price, thanks to what Pilbara Minerals is doing with their BMX auction. Again, it's for small tonnage, but it does give you an indication of what the overall, I guess, appetite for not even 6% spodumene, 5.5% spodumene is. And right now that's in sort of, the 7,500, close to 8,000, maybe not quite as high as $8,000 per ton. So when I see that start to stagnate or wobble or perhaps fall, I think you're ultimately going to see ripples in the lithium price, perhaps 3 to 6 to 9 months after that. But again, I see no evidence of that right now. So I would argue, coming back to your original question, I think 2023 is a year where the lithium price stagnates, but again, it is resoundingly and robustly positive for those companies that are producing battery quality material or not even battery quality material over the next couple of years.
I know you talked about volume, and we know it's right now it's really a crucial time for those automakers and battery makers to secure that supply volume. And as we've been talking, and you also mentioned, everybody's expecting prices to, I don't know if everybody, but most people are expecting prices to remain quite high at the moment. What do you expect to see in terms of contracts, lithium contracts with producers? Do you expect dynamics to change next year, or continue to change, I guess, next year?
Yeah, I think they'll continue to evolve. I mean, look, I don't have any special insight here. I'm just sort of keying off of what I think all of us in the industry know from listening to conference calls and speaking to industry executives. And it's that, while the spot price is interesting and it's what's got everyone's attention, it is, generally speaking, a small part of the lithium market. And contracts, by and large, are not necessarily based off of that spot price. What you are seeing, of course, is a situation where contracts are indexed, and rather than focused on spot prices or fixed prices. So you're going to see pricing contracts, I should say, embedded with floating pricing going forward. And again, depending upon whether or not you're the buyer or the seller, that could be a particularly good thing. But I would assume that many of these contracts would have things like floors and ceilings embedded in them, again, to protect both buyer and seller, because at the end of the day, what we're trying to do is grow this market from a volume perspective sustainably. And putting floors and ceilings in contracts is one way to do that. So, as contracts roll off, if you will, old contracts roll off, they'll be renegotiated and probably restructured. So the miners in particular can capture high prices, but that would be predominantly based off of an index-based floating price.
All right. And you did mention investors. And in terms of investments, if lithium prices stagnate, as you mentioned before, do you still expect optimism for the sector to remain high in 2023 in terms of investing?
I would think so, because again, if you take a step back and look at other commodities, and I'm not going to argue about whether lithium is a specialty chemical or a commodity. I personally view it as a specialty chemical. But my point is, if you think about other investment opportunities in the hard asset or the commodity space. Even lithium, if the price were to stagnate, the companies, again, as I mentioned earlier, that are able to either expand their production or get into production in the next year or two are going to have absolutely fantastic returns relative to other commodities that either haven't seen the same sort of price increase or aren't likely to see the same price increase in the coming years. I mean, so much of what happens in the commodity markets from a returns perspective is dependent on China and the China growth, or let's just call it, in this case, the China reopening story, which, from 1 week to next seems like, okay, China is going to reopen and then, maybe not. And now currently, as we sit here today, looks like COVID zero policies are going to be relaxed a little bit. From a macro perspective, it looks like the inflation narrative or inflation data may have peaked. And so that could generate additional returns maybe across the spectrum. But yeah, I wouldn't think that you would see very many commodities at all outperform lithium or outperform companies that are producing lithium simply because of these much, much higher prices, which have them well positioned for returns well into the future.
Many of our listeners are obviously interested in the junior mining space. And I guess one of the main challenges junior miners continue to bring up this year has been how long the permitting process takes. I just wanted to get your overall thoughts on the moves we have or haven't seen from governments in North America, Europe, and how do you see this developing next year?
Well, I think, look, just in general, I mean, look, the permitting issue, the good news, at least here in the United States, is that you have multiple departments across the U.S. government, the State Department, the Department of the Interior, the Bureau of Land Management. I mean, any entity really involved in permitting in some way, shape, or form, they're all talking to each other. Okay, which may not sound like much, but given the glacial pace at which government tends to move, I think that's a positive sign. Now, what they decide to do, and if there is any streamlining of permitting that takes place here in the United States, it will be a welcome addition, right? Because we've seen pretty clear policy signals, certainly here in the United States with the bipartisan infrastructure law and with the Inflation Reduction Act that are really, geared towards, I would say, the mid to downstream pieces of the battery supply chain, but not in the upstream portion of the supply chain, right? Not in the mining. And so we have to find a way to be pragmatic. I think all stakeholders along the supply chain have to find a way to be pragmatic and bring more raw material on stream in a time frame that is not measured in decades, but is measured more in months to years. And, look, that just has not been satisfied at this point in time. I do think, generally speaking, when you think about supply chain build out and self-sufficiency, whether or not it's the upstream portion of the supply chain or refining or cathode or anode manufacturing, this is not China against the rest of the world anymore. I really think that it's a three-way race. Again, I think the policy evolution that we've seen here in the United States, the policy evolution in the European Union, for example, with the battery directive, have China, the EU, and let's just call it North America, really facing off for what is a limited amount of raw material, a limited amount of permittable and let's just call them exploitable assets, and also the intellectual firepower to build out these supply chains, to innovate around new mining methodologies or battery technologies as well. So, the takeaway there is that if we're all going after what is effectively a finite amount of either infrastructure in the terms of mines or intellectual capital, it should put a premium on that material, which I think argues for higher prices for the raw materials in particular out over the next few years as we sort of race to, enter into this green CapEx cycle, as I like to call it, and build out these battery supply chains.
All right. And I also wanted to ask you about social licenses and community support for mining projects as these governments continue to push forward to bring more supply. Will we see the industry focus more on that aspect as we enter 2023?
Yeah, I would argue that the industry has always focused on that specific aspect, because of course, unless you have to your point the social license or the local buy-in to build a plant or build a mine, it doesn't matter what the grade is, it doesn't matter where it's located, nothing matters until you have found a way to work together with local communities to build out this infrastructure. And so I would think that you would see continued efforts on the part of the mining business. And again, not just here in the United States, all over the world, to really make sure that, again, before a shovel is put in the ground, before a permit is even submitted, to make sure that the local population is on board.
And Chris, aside from lithium, which other battery metal will you be watching in 2023?
I guess if you want me to pick metals, I'll be watching copper in particular, and I would be watching rare earths, not so much from the standpoint of, what new mines are going to come on stream or anything like that. But again, I think the real hole here, aside from where is raw material going to come from for the battery metals, is that refining. And in the case of the rare earths, what about the separation capacity? We've obviously MP Materials is, I think, getting close to hopefully achieving that. But again, in terms of the rubber meeting the road, I think that focusing on rare earths and rare earth separation capacity outside of China is going to be an interesting area that I'm looking at in the next year or so.
And when you look at what has happened in the entire battery metal space this past year, what would you say is maybe a trend that was overlooked in 2022, or a trend we should be talking more about next year?
Well, I think, there are the couple of debates, maybe macro debates that are happening in the battery metals are, number one, is this a bubble? Okay. And then number two, are we in a green super cycle, right? Are we in a battery metal super cycle? And so, just to address the bubble issue, my short answer would be no, we are not. I think if you were to define an investment bubble, you would see undisciplined capital allocation. I'm not seeing any of that currently. Prices increasing regardless of news. Yes, lithium pricing is way up, but we've seen a lot of volatility with nickel and cobalt in particular. Number three, in terms of bubble signs, would be outrageous valuations. Again, on a widespread basis, I am not seeing that. We could certainly maybe chat about certain companies where you scratch your head a little bit, but that is the exception as opposed to the rule. And then, easy money and low rates, which really, I think, provide the fuel, if you will, for investment bubbles. And of course, interest rates are not on the descent, they are on the ascent. Which I think has kind of slowly taken the air out of any sort of bubble valuations in the battery metal space. Just to address the super cycle narrative, again, let's look at the most recent super cycle that we all went through, right? 2002 to 2012. And so what was that, I guess, fueled by? Number one, it was fueled by growth in China, or let's just call that rapid industrialization. It was fueled by low and falling interest rates, and it was fueled by free trade and globalization. And so as we sit here at the end of 2022 into 2023, every single one of those points that I just laid out to you is in reverse. Okay. China is not growing at 10 to 12%. Under the best of circumstances, I think it'll grow at 3 or 4 or 5% per year. Interest rates, as I just mentioned, talking about bubbles, interest rates are not, maybe on a historic basis, they are low, but they are not falling anymore. They are on the ascent. And so that actually raises an interesting separate question about what should the true cost of capital be for a new battery metals project, perhaps another question for another day. And then the third point around a super cycle, free trade and globalization, I think you can make a very compelling argument that maybe if globalization is not dead, it has certainly been arrested or maybe halted or is paused. And so again, I wouldn't call this a super cycle, although I would, again, coming back to your original question about, what are you interested in? And I still think you have to be interested in lithium and copper in particular.
All right. And Chris, my last question for you today, as we close this interview, any other factors investors should be watching in 2023 that could impact the battery metal space, or any other thoughts you want to leave the audience with?
Yeah, I think, look, the whole sort of narrative here around maybe the battery metals or electric vehicles, it really hinges on government and consumer support. And so I would be keeping a close eye on, just here in the United States, how the Inflation Reduction Act is interpreted by, for example, the Department of the Treasury or the Internal Revenue Service, because that will send signals both to corporations in terms of the investment decisions that they're going to make, as well as consumers about how to approach the decarbonization and the electrification thesis. So that's one area I would be looking at. And again, I think, just to sort of summarize, I think the pricing volatility that we have seen in the last, year, to use kind of a slang term, you ain't seen nothing yet. And I think the challenge for the companies in particular is how they manage and balance a very kind of rocky road with respect to pricing volatility going forward beyond just lithium. I mean, you really have to think about all of the metals together.
Right, Chris, thank you so much.
Thank you.